So let's get right to it. So it's been an interesting week, you know. I think a lot of things happened. A lot of very interesting things happened on this week. We saw a lot of interesting stuff. First of all, I think by Thursday, I think Wednesday was one of the most interesting things that happened. Um, Bitcoin reached down to 60,000. Um, it was not only a Bitcoin based event, but it was a market wide event, as we can see here. Um, the Nasdaq also experienced a sell off, was mainly led by some AI fears that AI was supposed to take over um, the software sector and in a way make them redundant. So it was a fear-led sell-off, market-wide sell-off, but also exposed how weak and how defenseless Bitcoin really is, and how without a really narrative, But we can see here that the Nasdaq also experienced a major sell-off, just like I said, I turned bearish at 25,800 last week. You can see my video that I turned bearish before this happened. I turned and then experienced a sell-off. And Friday we saw also people bought it up. The Dow Jones made also record highs. It broke $50,000. I saw this. I saw this as a somehow as a look, as a seek for a safe haven in a way. People were, after this sell-off in the tech sector, the whole week through, then we saw the Dow Jones breaking all-time highs. People were rotating into safer stocks, right? But nothing's gonna be safe when the market implodes, right? Like, not even the Dow Jones. Maybe what I mean. So in this case, so yeah, it was a market-led event, but we can see that Bitcoin just takes, it's only correlated to the Nasdaq, only to the downside. Whenever the traditional markets go up, Bitcoin does not go up. Whenever traditional markets go down, Bitcoin follows through, but exponentially, just only on the downside, which is such a shame, because a lot of people had hope, a lot of people had confidence that something would happen, that people had a lot of trust and hope. We had a crypto president, we had a lot of things going on for crypto this year, and just ended up being a whole lot of disappointment, man. I mean, a whole lot of failed dreams, and but it just shows you how I believe that this market is really broken. I believe that something happened in October 10th that really broke the crypto system. I feel like it's now ever since it's been unable to raise a bid. I feel like the core system, like something in the infrastructure, something inside the framework, the coding of the trading, um, vase got really damaged. I feel like now it's like, and they're not. I feel like they do not know what's really going on, how to repair it, and what really happened. I feel like the problem's still there, and we have seen it. We have seen that the problem's still there. That people are selling continually, hasn't been able to recover ever since. So that's my thesis. I believe that ever since the October 10th system-wide issue ever, I think the error is still there and has not been fixed up to date, and probably won't be, for some time until someone, until some people, explode. I really think that, like I said last week, I believe that we are on a bear market. The bear market has now been confirmed, and I think the bear. I think it's both ways. I think it's a Binance coding issue, and also it's deliberate selling. It's uh, how to say, a premeditated sell off. I feel like CC knows something. I feel like he knows that. In a way, I feel like crypto is front running stocks and market. I feel like crypto just entered a bear market, and we're gonna see the same on the traditional markets. Um, one of the arguments that support these theses is the rise of gold from last year up to 70%. I think it's unprecedented. It's not really unprecedented in recent years, and it signals a market-wide, a systemic loss of confidence and a deep distrust of the system, of the dollar, the banking, the governments. I think the gold is signaling this time. Many people are seeing it. Many people see it, okay, as this gold rise as pure mere speculation or mania, but there's something behind it. There's something, behind every, if it were the case, that was only mania and pure speculation, you know we would have seen that in the past, but we have seen that it's rarely ever happened in history that gold has retraced or has shown that a previous rally. It has rarely shown that the previous rally was just mere speculation or mania. It has sustainably so climbed upwards. It is not a fake. It is not a fake out. It is not mere speculation. It's founded belief. It's founded conviction behind every single rally, and every single of them has been confirmed, has been proved years later. Conviction that the system is failing. If they weren't to be proved, if they were only mere speculations and mania and fake outs, we would have seen retracements a long time ago. But this was not the case. Really not the case at all. So we're just gonna see the yearly chart, so you can appreciate better what I'm trying to say here. So you're gonna see here that ever since the 70s, we've seen a consistently upward trend. Uh, if it were mere speculation, we probably would have retraced or show some kind of range. But we have seen that this continual distrust, this continual people are this time around, just after so many bailouts, governments, the Fed is no longer independent. People always going to rely on the Fed to bail out every single implosion in the system, and this gold pattern just reflects the kind, like the opinion of it, like the whole overall distrust to the monetary system, to the to the dollar, and everything in between. So we can see here that in the 70s there was I think the only comparable rise we can compare to in the 70s, but we have to remember that back in the 70s, late 70s, there were like huge amounts of inflation. The late 70s were very tough times for a lot of people, and the Fed chair at that time responded with imposing a 20% hike on interest rates back in the 80s, back in the end of the 70s. And we can see here that this, in a way, helped the gold, in a way, taper, stabilize or consolidate. And we can also see at the same time that when these measures were applied, the dollar was before then was taking a huge dive. The dollar was obviously, because of the rampant inflation, was losing value rapidly, and confidence too, in a way, in the system. And also magnified by the oil shocks, and it was a very turbulent decade. It's very similar to ours in a way. And then there was this chair that was talking about hike rates, and in a way, and we can see here that the dollar regained. People started buying dollars because, well, we're going to, people were going to try to invest and buy treasuries, bonds, and invest in the U.S. economy, because there was this character that was strong enough to do such drastic measures to do something to change the economy, to save the economy, whatever you want to call it. And you can see here that the dollar responded accordingly, because the rate hike was dramatic in such a way, right? And then by the 80s, there was like a sort of consolidation in a way. Then we saw another sell-off, and people, in a way, were not really panicking or buying. People trusted the dollar in a way. It was stable in a way. There were not many threats until the turn of the century, right, into the thousands. The thousands is another, after the 70s, after the late 70s, is another crucial point, because many things happened on the end of the century, and it's also important to understand it to gain a better appreciation of what we're going through right now in this day and age. So there were many things happening. First, there were the Y2K fears. Many people thought that, at the end of the uh, there was going to be like some panic because of the system going to reset and the end of the turn of the century and things were going to explode. There was panic, right? And then also another event that took place at the early aughts, the early 2000s, was the infamous dot-com bubble event, right? Where the market just um, took over like more than 50 or like 70% in the time span of 3 years. Like, and so we can, in a way, uh, dimension how crazy such a. Hold on a second. Hello, hello. Yes. Hello, 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 hello. Yes. So we can dimension how crazy this sell-off is. Just like more than 50%, like 70%. Just imagine what would that do in this day and age. What would a 70% drop do to this market? It's probably going to be the end of the world. Like considering 2022, considering how fragile the economy is, considering how just a few rate hikes, how just with the few rate hikes can break so much, can break so many banks. Just imagine a 70% sell-off. That will be insane. That will be crazy. That would be crazy, man. We couldn't sustain such a, we couldn't even sustain 1 year of sell-off back in 2022, let alone 3. Just imagine 3. It will be fatal, right? So because of that, we started to see a rise in gold. People were starting to devase, like the de-dollarize. People started to buy gold. People started countries started, like world reserves started to buy gold. Central banks started to buy gold around the globe. And and there were also, because it was different. Like the dot-com bubble was different from 28 in the sense that there were not bailouts like we faced in 2008, when the government and the country itself, the people, the taxpayers, financed, carried these companies, these corporations' losses. And back in the that's why this example is interesting, because back in the dot-com bubble, there was not yet such a drastic change of policy that we are living now. It was before that, before that change of policy of now we're living in a post in a post 2008 policy that reflected, that shown itself again in 2022, in 2020. Yeah, I mean the COVID thing, where the government responded and injected liquidity instantly. Like the time of response has gotten faster and faster. Like there's no second thoughts about it anymore. People, they don't hesitate, they don't think twice now. when it comes to injecting, when it comes to printing, when it comes to um, easing uh, the economy. That's what's changed now. That's what's leading now this surge, this surge of gold. That's mainly what's causing this, propelling this gold rise. So that's what we've been seeing. But now we're talking about the 20,000s, the dot-com bubble. So it went up, 2002, 2003, 2004, all starting to go up. That was, that was a signal in itself. The dollar started to go down because mainly, I believe it was, I think the government, the policy back then was that of a quantitative easing. So gold started to see like the proper alternative. People started to distrust the system again after a decade or so, 2 decades of, of controlled stability. So people started to panic after the dot-com bubble. It is no wonder that this happened during the century, because a lot of things started to shake at the turn of the century, right? Not only dot-com bubble, but also 9/11. These events of geopolitical tension, of uncertainty, also feed gold. So people started to distrust. There was a rally. And then the pivoting year, I would say that the important year happened in 28 again. We saw another drop of 40%, the stock market. And it was very interesting at this time because, just like I said before, the government now started to instantly inject liquidity to the economy to save, to bail out banks using taxpayer money. So this propelled also gold, the rally that we've been seeing since the thousands, propelled it even further. So there were a couple of interesting things that happened this time. We saw there's a lot of wicks happening here, the dollar. Well, mainly because it was attributed to, it was a liquidity crunch in a way. People were selling their assets on 2028, on 2008. It's not that people were buying dollars. I mean, people were buying dollars to service like their debts. That other countries like sovereign debts. Like other countries were selling their assets, and this made a temporary surge hike in the dollar, so they could service their dollar denominated debts. That's why we saw a temporary and short spike, but it's not. It was not a how you say a trend motivated buy. It was more like panic. People were panicking. We were in need of dollars, and it was a major sell-off. People wanted dollars so they could add to their collaterals. A lot of leverage in the system. People just were panicking this time. So that's another cause that the Fed started to print. They started to develop new like credit lines, direct credit lines, with sovereign governments in order to provide safe and fast direct liquidity um, to parties. And I find this very interesting. There's a couple of candles. It shows a lot of volatility. You know, right? So um, uh, it's very tough. It was a very tough subject to talk about. So what happened here? So you know, so people thought he was gonna go lower because they were printing, but people started buying too. Service, right? The debts, and so it was. You can see here a very turbulent time with the dollar. The dollar was facing a lot of like government intervention. You can see here manipulation. It was not a natural movement. It was definitely government intervention. You can see here. It just looks very artificial. It was not like, I don't know how can I. It was not like previous years. You can see the trend, the pattern here. Something was quite off. That's why one of my theories that I believe that if the dollar ever gets to reach this level again, it's gonna break even further, hard, because there's like I feel like there's a lot of bets that were here. People bought here on like the economy and the world is like resting in this place. The dollar is resting in this place. That's why it's primordial. Like the government, like the system wise resting in this place, because that's where they said that, okay, like this is the point, now or never, you know. Like this is a final point. They made this really big bet that this was going to be it, right? So it was the beginning. It was the beginning. It was a new way of printing money, of devaluing, of debasing the currency. um, and then it signaled also that they were just gonna keep printing money as a way of dealing with things. And then starting 2008, it started to, like I said, a policy of quantitative easing started to incentivize the economy. You can see here that I think at that time the rates were the real rates were, I think, negative, considering inflation and everything. It was such a time. And then 28 happened, 29, 10. It was a period of quantitative easing because of the crisis, the crash. So then when 2013 happened, there's also around 2018, 2010 was also the crisis in Europe. The sovereign debt crisis in Greece and so on. So it also caused a loss of trust on the system, and because Europe started to not not only bail out banks, but bail out whole countries. You know what I mean? So that was insane. And yeah, just they didn't let things die like the way they did back in dot-com bubble, when many companies just disappeared overnight and capital was gone. Like this time around, it's been different now. Like they were going to print more money. That means that in order to save the system, to do whatever it takes to save it, Like they're going to devalue what you have, devalue the money, the dollar, to do whatever it takes to keep this thing running. You know, no matter the state, no matter the state it is, it's gonna do whatever it takes, right? So that's what they showed. That's what they showed. The cards that they had, they showed it back then. So that's what we saw in 28, 29, 11, and on third 14, I think they started to they started to hike again. I believe the interest rate started to rise again. We saw a brief period of gold sell off. People thought, people were investing, buying U.S. treasuries again. The Fed and their friends did their thing, again to make people, investors, buy America again, buy securities, bonds, whatever, buy debt. And we can see here that, and the stock market reacted accordingly. We saw huge green candles this time around too. You can see here by 30%, 37%. People were buying hard, because the stock market was going on because of inflation. People knew very well that it was going to be quantitative tightening forever, right? So this, the traditional markets, like the equities, just like that, like those kind of conditions, perpetual quantitative easing. So that's why we saw a sudden continual spike in equities after ever since the 2008 debasement and bailout program, and this quick whatever it takes policy took place. So, and then during this period of 28, 27, it was a weird period, but I think the main thing was 2020, when COVID happened. It was interesting because it was also a very volatile year. You can see here that it was volatile because there was this news that this new pandemic would wipe, but also signaled a relief program for it was an instant relief program for lots of things, and that signaled even more quantitative easing, even more debasement, even more valuation. So that's what we saw. That's why this candle is volatile in the dollar, and it seems that the gold kept going up. It started to go up again. Why? Because it started to go up again, but this time gold search was more on the sense that was the thought behind gold was basically like this whole thing is just unsustainable. That's the reasoning behind, because they were going to they're going to lower rates even further, you know, they're gonna crush the dollar. That eventually is gonna cause really harm. You know, real rates are negative, so gold just didn't see any real way out. You know, in this time around, and so they were just at this point they were just not dealing with the issue at hand. Um, right? They were just postponing, and that's where the beginning of the gold uptrend really started back in 2020. They saw that okay, it was not going to be sustainable in the long run. So, and then we saw like the 2022. That's when they signaled that they were going to hike rates finally. They were going to do the right thing, right? And then that's why we saw also another very volatile year for the dollar, because the dollar kept going up because of this hike trend, and also equities took a major dive because like we said before, like I said before, just equities don't like high interest rates hikes. You know, they make their tantrums, right? They make a whole drama out of it. So that happened in 2022. It was a year of hikes, of silvering. It was a bear market, crypto, whatever, right? Crypto, equities. Banks took a major hit. That's where the system finally revealed itself, showed its cards, how, in the sense of how fragile um, the economy really is, how fragile the system is, how leveraged the system really is. That's when it showed their playing cards. This is how the system showed that it cannot handle such rate hikes anymore. You know, so just imagine 20% hike, just like they did it back in the 70s, and it was able to completely obliterate, completely destroy the world economy as we know it. You know? So just why 2022 is very important, because that's where we can see, that's where it was revealed to us how the inner workings of the system, of the banks, how leveraged everything is, how crazy, insane greed there is in the system, right? So we saw a little glimpse of that back then. We saw a little bit. We drew the curtain, and we saw how fucked things can really get, and then we closed it up again, never to see it again, right? Yeah, like unemployment skyrocketed. You know, it's just really fragile economy, and in a way, that signaled, that was the beginning, in the sense that there was a telling that there was only one way to go forward, which was either to manage, to keep managing, to keep postponing, or to cut, to keep cutting. There's just these two ways. There's only two ways left. That's what proved to us. That was what's shown to us. there's only two things: either to pause, to keep pausing, or to keep cutting. But to keep raising, it would be just having shown that it's not going to be um, a reliable thing if you want this system, as we know it, um, to keep on perpetuating itself, to keep on existing. So what we're left is so that's what happened in 2022, right? But they didn't cut rates. They didn't hike rates. They didn't. They hike rates in order to appease inflation, to reduce inflation. But and we are living in a way in this period, like the year right now is a consequence. We're still living the cost of this year, these 2 years, is still the cost of that year, of those years, right? We're living right now in that period still. So so inflation has not been mitigated, has not been, and the target that was has not been lowered to the target that was originally planned. And there's some sources that say that inflation is sticky, that it's not willing to go any lower, and that causes a lot of uncertainty, and there's also another cause for why the dollar keeps going up, because of distrust and the gold keeps going up and the dollar keeps going down because of distrust of the system. And sometimes the dollar does not even go down. You know, because there's whole demand, because gold knows that people will buy dollars anyway, because it's the reserve currency, because it's the debt originally is denominated in dollars and so on, because a lot of people dealings are denominated in dollars. People are always going to be needing dollars, right? So that's why we have not seen a catastrophic event happen in the dollar, because people are always going to be there was always going to be demand for the dollar, because everything's denominated in dollars, and gold knows this. Like gold is not going up anymore because dollar is going down, because it will not it can go down, but it has shown that it will not go down that much, because there's demand. There's always going to be demand, and gold knows it, and it just keeps going up nonetheless, regardless if dollar goes down or up or down. Gold is going to go up regardless. Back then, gold used to pay attention to the dollar, used to respond accordingly. It used to be a correlation. But now that it's seen what it has done, and how the world reacts, and how the world functions, the inner workings, it just doesn't care anymore about the dollar. So that's why we have seen this major trend breakout from gold. I believe gold will continue to go up. I think at least we'll hit 7,000 pretty soon. That's what I think. I believe. I think we'll reach 10,000 also pretty soon. Probably in a couple of years. I don't think that's very unlikely. I think that's relatively likely, considering the state of affairs, considering where we at right now. It's because gold knows that they will not hike anymore. Gold knows that the Fed is just politically so dependent. It's just so political right now. It just lost its independence. And what does the government want from the Fed? It was quantitative easing, because otherwise rate hikes will be a political suicide. It will be raising unemployment. Businesses, banks going bankrupt. It will be abysmal for any government, for any political figure, administration. And gold responds to this also accordingly. And so that's where we are. We are in this period. We are still in the COVID period. We are still on the reaction of the COVID period. So they're gonna keep lowering. Inflation is gonna go up. Interest rates won't remain negative. Problems going to start to rise because there's rising inflation. People are going to start selling the dollar. They're doing that already. Selling the dollar because, well, there's negative interest rates. The opportunity cost of holding gold is low, so they switch to gold, right? And inflation is going to go up, price is going to go up. And there's also this phenomenon of that many people are considering, that we are right now, called stagflation, where there's this phenomenon where there's rising inflation, but there's also rising growth, rising unemployment. So you're like you're ruined both ways. There's no, you cannot go either way. Either way, you're going to be ruined. So there's many theses, and these theses too, this stagflation thesis also is causing this gold surge. So I think that what I want to say here is that we are not reasoning enough. We're not discussing enough what's happening with gold. Why? We're not talking about this recent gold surge enough. We're not panicking enough. You know what I mean? This gold surge is not, you could say, well, it's normal, but 70% a day, a year. That's quite something. You know what I mean? Like it tells something, but they're not gonna talk about it. The people that are invested in the system, they got, because it's right. So that's a major red flag. That's a major problem for the system. So this gold knows that the system is just a loss of confidence, and it's troublesome in the end day. So that is mainly what I wanted to say. Inflation is not being contained, and it's even thought that it's going to go even harder because of the tariffs. We have not seen. This week's going to be interesting because it's going to show a lot of data, reveal a lot of fresh data, jobs data. We have seen that we've seen a decrease of jobs openings in January this year. So we are putting ourselves into a very it's a very weird spot right now, right? Very stagflation, stack looms, right? It's looming in a way. So we're at a crossroads. That's definitely a fact. We're at crossroads. It's either keep postponing, or cutting. Keep managing, keep pausing, or cutting. But as we have seen, the other alternative is really no alternative. And that propels gold. Because it shows that the system's gonna be ever one sided. And that's not really that's you know what I mean? That causes uncertainty. A lot of uncertainty on monetary policy. So, that's what I wanted to talk about regarding gold. I think the past year we saw a dollar sell off. When you look at the charts, because of cutting interest rates, we saw a rise in Nasdaq accordingly. We're gonna cut interest rates. Inflation rise accordingly, and the Nasdaq assets equities rise accordingly. So yeah, that's where we at right now. We're in a very special place, obviously, and I don't like to prophesize doom, but I just wanted to talk about gold, and that's it. You can make your own inferences, but I just want to talk about recent gold search and why we're not talking about it enough. That's all I wanted to do, to make a little bit of background explanation, and that's what I wanted to do. I hope things don't turn out as bad, but just geopolitical things also causing this gold surge too. But I just hope things turn out well for everybody, for all of us. But anyway, I just gonna leave this live stream. I was gonna end it, gonna close it. I'm not gonna talk a lot about Bitcoin. I think we're gonna talk about Bitcoin some place next week. I think Bitcoin is relatively fucked. I think, like I said before, I think that the system, I think the Bitcoin, I think the Binance, the internal workings, the coding, I think got fucked. It got ruined. It got messed up. It has not been repaired ever since, and I think that's why we haven't seen a really rise in Bitcoin. We have not seen anything, a relief or anything like that. I don't think it's going to happen. I think the green button, the internal coding green button, got disabled. It's not working, and I think we're gonna go even lower. I think my prediction is that someone's gonna get blow up. There aren't many people got blown up already, but I think the market's going to liquidate someone. Either it's gonna be Sailor or the Tumblr or Binance, I don't know. But this bear market, like previous bear markets, I think this one also is gonna end before it turns upward. It's gonna end with something really dramatic, something really explosive, just like we did with the FTX. Something is gonna happen the same ways. Bitcoin is very predatory in this sense, and we can see the pattern that it's going after someone. It's going after a particular target, because it's going aggressively against someone. Just look. It's hunting someone. So I believe we're gonna go even further lower. Maybe here, 52. People have, 50 have targeted 40, 50. I think that's with Bitcoin. Like, you never know how low it can go because there's no fundamentals. There's no balance sheet. There's no way to gauge, right? It's a highly speculative duration risk assets, and you know. So let's see how it works. I'm bearish on Bitcoin. I'm bearish on the economy, and so this week's also going to be interesting because a lot of data going to be released. So let's see how it turns out, and we're going to see us next week.